Gold prices rebound as Swiss National Bank backstops Credit Suisse, ECB hikes, Ackman calls for blanket guarantee. Gold prices rose again in London trade Thursday, moving back towards yesterday's multi-month and new record highs against the world's major currencies as the latest government action to stem a worsening banking crash failed to stem a new fall in global stock markets. Time is running short before the fire becomes a conflagration, says hedge fund manager Bill Ackman, now calling for the US government to make a short-term guarantee on all bank deposits after calling at the weekend for the authorities to backstop depositors at Silicon Valley Bank, a move they then made on Sunday which has spurred big withdrawals from smaller banks, transferred by anxious savers to the largest US institutions. Shares in European giant Credit Suisse meantime bounced 30% before edging back after the Swiss National Bank declared overnight that despite Credit Suisse now losing more than 87% over the last 5 years, with 1/4 of that drop coming in the last month, the problems of certain banks in the USA do not pose a direct risk of contagion for the Swiss financial markets. Debt insurance contracts yesterday put the odds of the $8.4 billion bank defaulting at 1 in 2, but the strict capital and liquidity requirements applicable to Swiss financial institutions ensure their stability, and Credit Suisse meets them, the Swiss National Bank went on, adding that, if necessary, the SNB will provide Credit Suisse with liquidity. Credit Suisse responded by saying it is borrowing up to 50 billion Swiss francs from the SNB decisive action to preemptively strengthen liquidity, according to the troubled lender, and using some of that money to buy back around $3 billion of its own debt. Betting on next week's meeting of U.S. Federal Reserve today flipped back to seeing a small rise in interest rates to 5.00% per annum as the most likely outcome after the European Central Bank went ahead with the steeper half-point hike it had pre-announced for euro rates. Inflation is projected to remain too high for too long, the ECB said, adding of the Credit Suisse and U.S. banking slumps that the 19-nation central bank is monitoring current market tensions closely and stands ready to respond as necessary to preserve price stability and financial stability in the euro area. Our banking sector is resilient, with strong capital and liquidity positions. European banking stocks mostly rallied from the last week's steep plunge, but Germany's number one Deutsche Bank fell by another 5.3% to hit a fresh 5-month low in Frankfurt. Global stock markets overall meantime gave back an early rally to trade lower for the 6th session in the last 2 weeks, retouching Monday's fresh 2023 low on the MSCI World Index. Gold prices had retreated hard overnight but rallied back to $1,925 per ounce for US traders and touching £1,600 per ounce in UK pounds and Australian $2,900 for Australian investors, both just shy of yesterday's fresh all-time gold highs. Longer term, gold's strong average performance in the lead-up to and following both initial Fed rate cuts and U.S. recessions keeps us biased for higher prices as macro uncertainty swirls, says a note from number one U.S. bank and London bullion clearer, J.P. Morgan, predicting a top above $2,000 per ounce in 2023. U.S. banking stocks have sunk by 1/5 over the last 10 days, closing Wednesday at the lowest since mid-November 2020.